listening to Knowledge at Wharton on Business Radio, Sirius XM 111. Here again is Dan Loney.
Hour number 2 of Knowledge at Wharton here on Sirius XM 111, Business Radio powered by the Wharton School. Don't forget you can join us each and every weekday right here at this time, 10 a.m. Eastern, 7 a.m. Pacific, right here on Sirius XM 111 for Knowledge at Wharton. Coming up this hour, the world of the Wall Street IPO about to take a major shift this week. Chinese e-commerce giant Alibaba out looking for funding. A story in the Wall Street Journal this weekend suggested that the IPO could have a value of $155 billion, which would immediately make it one of the largest ever listings in the United States and the world. Ken Wisnefski is the CEO of digital marketing firm WebiMax, and he joins to discuss what we're looking at here. Ken, this is a lot of money that's potentially going to be thrown around here in the next week.
I would say so. I think that, again, Alibaba has been something that's been out there for some time and obviously has a great place overseas from where it's really been able to show its dominance. But obviously it's a lot more in the forefront of what everyone's looking at here on the American investing side is it's kind of looking to do the roadshow, as you talked about.
For those people that don't follow it on an everyday basis, explain the process of the roadshow and what Alibaba is doing this week.
Basically just trying to garner more hype. I think that's kind of the best way I could describe it. Going around talking a little bit about ultimately, you know, what they do and how, well, frankly, they've got a very compelling story with the type of profit margins that they've been able to compile. So basically just really going around and ultimately developing more intrigue and interest in their actual IPO, and in turn being able to try to levitate that into a scenario where, they see a really nice uptick when they actually go public.
Yeah, and these are not your average investors that they're talking to. These are major investment firms that they're going to be discussing with. In fact, from what I had read, they're actually running 2 different groups around the globe to talk to a variety of different companies.
Absolutely. They're looking to really kind of be consolidated in their efforts as far as timing. I think, the buzz around Alibaba has really gotten very heated here over the past couple of weeks, and obviously it's going to intensify this week. So, again, I think they're looking to really be able to kind of do as much as they can to really be able to get as much information out there as they possibly can. And it's a different IPO than a lot of IPOs that we're seeing nowadays, because if you look at really valuation and you look at what they're doing, you can really stand to say that they're doing something really great. While in most other cases, it's the promise, it's the conjecture that a company is going to be great and that they're going to have huge revenue that really drives up the cost. So this is a little bit different than some of the IPOs we've been seeing. Many
people talk about how dominant Alibaba is, and you don't know how much that's going to increase with its appearance here in the U.S. market. But a lot of people have a certain level of faith in Amazon and eBay and the other e-commerce chains over here. So does Alibaba, even if they go public here in the U.S., still have work to be done?
I believe they've got a lot of work to be done. Again, when you look at the way they've been able to really kind of dominate the Chinese market, ultimately, when you look at coming into the United States, you've got 3 names that you mentioned. Well, actually, Amazon and eBay being 2. But in essence, some aspects of what they do almost kind of likens itself a little bit to Google.
Okay.
I mean, you're talking about 3 of the, kind of the prime areas that kind of own market share in their space at this point. So my concern would be if their focus is around kind of really coming in and becoming one of those dominant players, I think it's probably not a good play for them. But at the same time, to be entrenched as kind of the second player in a lot of those markets, there's obviously a lot of revenue to be had in that case.
Would they have a little bit of a foothold already here in the U.S. with the large Asian population in this country?
I think there's a chance that could kind of work across, but I think when you look at ultimately our e-commerce scenario and how we kind of do things right now, I'm not sure it plays as huge of a factor to them as one would think. But again, let's be honest. I think brand loyalty isn't what it used to be. When you look at Amazon, it's somewhat of a competitive shopping engine. If Alibaba can come in and find a way to have similar products that in some way are at a reduction over the cost of what you're able to get them from Amazon, obviously they've got a chance to be able to gain more market share, because clearly at the end of the day, I think e-commerce competition now is really very very price driven, and I'm not sure people, I know people are really like Amazon, and there's a lot of people engaged in it, but at the same time, if there's something else that comes along that's saving the money, I think people will I don't think people will feel that type of brand loyalty to stay with them.
Certainly, and as you mentioned a little bit ago, but the profit margins that Alibaba is able to turn right now overseas, it makes them very attractive.
It's unbelievable, actually, the type of profit margins that they have. Again, when I kind of first started to really do a little more diligence in Alibaba, again, it just kind of amazed me from the fact of where they're at. Because again, typically when you're looking at IPOs, you're talking about companies that are coming into the market that really don't have great looking financials, but everybody talks about their potential, their revenue potential that they're going to be able to do once they facilitate all these different tactics that they have to really be able to generate and capitalize on traffic that they have coming to their website. In this particular case, you've got a company that's already done an amazing job to be extremely profitable.
Sure.
It's kind of looking to grow above and beyond that.
It's interesting. I was just watching a TV show here that was discussing the same topic, and one of the quotes that they have from Jack Ma is about how he sees his country as customers first, employees second, and shareholders third, which for some businesses probably that's a little bit hard to swallow. For a lot of people, that might be attractive.
Absolutely, and again, I think you can't argue with his model. It's worked really well for him, but obviously, I think there's always going to be a little bit of a transition when you're taking something that's kind of been dominant in a very different marketplace, and ultimately trying to blend it into one that has very entrenched players in it.
Right. We're talking with Ken Wisnefski, who is the CEO of WebiMax, a digital marketing firm. Alibaba starting their roadshow this week. The numbers that are being thrown around, $155 to $160 billion. And I guess maybe it shouldn't be totally surprising, but I guess in this day and age, that's kind of what it is. But they've basically done this, in about a decade and a half, go from nothing to this point.
Yeah, no, and it's definitely something that, again, I think is pretty amazing, and just kind of when you're looking at the numbers that they've been able to pull in, it's clearly something that I think we're not really been accustomed to lately, just from the type of IPOs that have really been kind of hot or hyped here as we've kind of come into the market, even going back to, Facebook's very hyped IPO. If you think about it, one of the biggest challenges that everybody talked about there was the profit margin and
Sure.
The ability to really be able to capitalize on basically really turning into a revenue producer.
Now some IPOs that we've seen over the last year and a half have done very well. Some of them have not done as well as they would like. What do we kind of get a feeling on Alibaba right out of the gate, right when they first list? Are we expecting to see their share price skyrocket, or could it kind of languish where that opening price is, between $60 and $66 a share?
I think that, and I think that's really the big question, is that they've kind of come into prominence here, and it's really been talked and hyped about over the past couple of weeks. The only concern that I have is the timing of it, just kind of coming off kind of what we'd call kind of somewhat the summertime, and kind of opening up on an IPO about this time.
Yeah.
My only concern would be that they haven't had enough time to do the hype that they're talking about, even though I think their focus was, well, we don't need to do a lot of hype. Our numbers speak for themselves.
Sure.
We could really be able to dominate off that. So I think you're going to see it probably rise, but I don't think it's going to be that meteoric rise that you might expect from some IPOs, just because I think already at kind of the cost structure, and I think people might feel that maybe they've peaked. Maybe this is their high point. Maybe the potential isn't there for them. Maybe profits only kind of revenue might grow, but profits might shrink.
Sure.
And ultimately have they kind of peaked compared to some other companies that it's all about the promise.
We're talking with Ken Wisnefski of WebiMax, the CEO of that digital marketing firm. 1-844-WHARTON, 1-844-942-7866. If you have a question, we're talking about Alibaba, who is going to be going public here in the United States in the next few days. Mahmoud is in the state of Michigan. Mahmoud, welcome to the show.
Hi, yes. I have a question. How a regular person can buy in the IPO of Alibaba or other company? Can we buy their stocks just normal on the market, or do we have to go through a special trade route, or how do we do that?
Ken?
I believe that once it goes through the IPO, I think it's going to be available just on the regular markets. I'm pretty certain that's going to be the case.
Great.
So if I contact an agent, I should be able to buy an IPO through an agent or through like an online service?
Yes, I believe that in this particular case that it's going to be set up that structure. I don't believe it's kind of that launch that kind of Google had done initially, where it was somewhat kind of closely held. I believe that they're more open as far as the actual IPO. That's been my understanding up to this point.
All right, thank you very much.
Great, thanks, Mahmoud. Alibaba listing here in the United States because Hong Kong rejected it. Why is that? Why did they say no?
It's really interesting. I've read about that, and I'm not 100% certain why they kind of looked at that and turned it away. Again, I think it's actually to the benefit of kind of the United States to have it here, but again, I think it's somewhat curious why Hong Kong did that. I've got to be honest with you, that kind of puzzled me.
Right. Now, a lot of people have written about how this listing also has some importance for Silicon Valley.
Sure. Again, I think when you look at ultimately what Silicon Valley is looking at and kind of how they're evaluating different stocks and what they've really been kind of coming up with, this is kind of an e-commerce model. It's somewhat becoming more of a mainstream model that they're talking about, and I think the traction that this stock gets is going to be something that I think Silicon Valley watches as they kind of work on some of the other scenarios that are out there. When you look at kind of something maybe that falls back a little bit from Alibaba, but Snapchat's been kind of discussed as something that could go IPO.
Yeah.
It's completely different, right? It's a company that has essentially no revenue and has plans to be able to monetize that revenue, or monetize that traffic, but hasn't been able to do so. So I think it is interesting to be able to look at and just understand the really diverse scenarios that you have when you're looking at two types of companies that will both be kind of hot, if you will, but extremely different positions from actual where they are from a revenue standpoint.
And it's also interesting considering the fact that Twitter, the story is out about them testing a buy button, that they are going to have e-commerce platforms on their site as well.
Yeah, I think Twitter is right now in a position that they need to really be able to define a way that they can begin to drive more revenue. The nature of Twitter is something that it's kind of a short stay. It's kind of a quick type of orientation related to that site.
Yeah.
So, again, I think it's a great idea for them to be able to put that into place. And while I'm a fan of Twitter, I'm not certain that it's going to be really a windfall of opportunity for them from a revenue standpoint when they look to monetize it.
What really has been the push behind all of these IPOs in the last few months? Because it seems like there are more and more companies that want to go public.
I think it's getting back to the days again where we kind of saw this in kind of the early the .com boom, if you will. I think you hit it on the nail on the head there at the beginning of our discussion with the hype. I think so many scenarios now enable companies to really be able to get hype, and in essence they're able to really just grow kind of users and not really grow with any type of real business model. And they use the IPO IPO to really kind of, liquidate and also at the same time be able to get teams in to really be able to help grow them. So it's kind of a win-win. If you think about it, right? You build something, you really don't have a tangible traditional business model, but now this gives you the opportunity to really be able to, see a windfall of money and at the same time begin to really quote unquote get serious about growing a legitimate business, if you will.
What does this do for the retail industry in America in general?
I think it shows that there's a lot more competition out there, and that the competition is clearly going to be pushing more towards e-commerce.
Okay.
Everything that's going on right now is very e-commerce focused. You see with the iPhone coming out, the payment platform that they're going to have directly on the new iPhone is obviously going to be something of intrigue. I think retail as we know it from basically storefronts is going to be evolving immensely, and I think if we look 15 to 20 years down the road, just retail in general is going to be extremely different than it is even today.
We're talking with Ken Wisnefski, the CEO of WebiMax, here on Knowledge at Wharton. If you'd like to join us in the conversation, 1-844-WHARTON, 1-844-942-7866. You can also tweet us a question at BizRadio111 or use my Twitter account at Dan Loney 21. You can do that as well. What do we know about Jack Ma in terms of his type of style? I mean, we mentioned the quote that he's attributed to before, but what can people kind of gather from what type of person he is in terms of what this company is going to be able to do here in the United States once it lists?
From what I've seen, he's somewhat very fanatical, if you will, about his brand and kind of the growth of it. So he's not kind of one of the guys that sometimes are attached with some of these IPOs that are somewhat just had a concept or were able to kind of get involved with it. He seems very passionate about the brand and about the growth. So again, I think nowadays it kind of reminds me of ultimately how Apple was viewed when Steve Jobs was there. Someone to really identify with the brand, and I do think that Facebook's done a good job with that with Mark Zuckerberg as well. People that are kind of passionate about their brands, people that are very tied to the brand, and I feel that probably fits in this particular case.
But how much would he be involved in this specific roadshow that's going on this week? Will he kind of just lay back, or will he actually get out there and talk to a few people?
I think it would be in his best interest to get out there and talk to a few people. I think that any time you've got someone at that level getting out there in front of this, it would make sense. I know if it was me, I'd be out there getting in front of everybody. So
we're talking about long-term investors then, basically, that they're trying to get right now.
I think so. I think that that's ultimately what they're going to be looking for, and I think that their process is one that they've probably got definitive areas of concentration that they're going to look to utilize the funds they receive through this IPO to be able to really scale the business. So I'm certain that there's a lot of reason that they're looking to kind of do this, and I'm sure that they've got a game plan. Again, this is a company who's had a good game plan to get to where they're at, and I'm sure they're looking to be able to exercise on the next phase of that.
Carl Icahn?
Yes.
I say that jokingly. I don't know if he would want to even be involved in this right now. I'm sure he would be. I'm sure he would definitely have interest.
Yeah, I'm sure. And again, I think when you look at a lot of the different companies that are out there, it's interesting just the ones that are kind of popping up. The one that I've seen lately that's been getting some intrigue is IAC. And just because of the, kind of some of the things that you're doing and, kind of the social dating space with Tinder and whatnot. And, frankly, there's an opportunity, I think, that of all the different things could be one of the most intriguing out there just because of the fact of its enormous popularity and the fact it's not been monetized at all and has a lot of ways it could be monetized very easily.
We're talking with Ken Wisnefski, CEO of WebiMax. You can join us in the conversation. 1-844-WHARTON, 1-844-942-7866 is the number. We've got a couple of minutes left with Ken. So we talked a little bit about how the IPO market has really exploded over the last year and a half. Do companies see what growth we've seen in the U.S. economy as kind of the pushing point for now is the right time for us to go public?
I think that that's an aspect of it. Also, I think like anything else, you try to line up your IPO before something else overshadows your IPO.
Right.
So I think that when we're kind of seeing this, if you notice kind of the distance between them to a certain degree has been good from the fact that it's enabled them to kind of do a little bit of that hype beforehand. So I think when you kind of look at who's coming up next, I think all of the companies are kind of playing a little bit of caginess and determining, okay, well, who else is out there? Where are they in their process? And okay, well, if nobody's going to step forward, we're going to be the ones that are going to take the stage next. And if you notice, there's somewhat of a little bit of almost chivalry in the fact that nobody kind of totally comes in and tries to kind of rain on or kind of circumvent somebody's opportunity in the spotlight. So, all the talk's been here over Alibaba here for the last few weeks, and it gives them an opportunity to really be able to be in kind of the glare. And ultimately, somewhere down the line, we'll be talking about that other next IPO that will have its time in the sun to be able to kind of be conjectured about and talked about.
Well, and we've seen some companies, go ahead and get the process started that they want to have the IPO, but then pull it back as well. Is that a normal process?
I think it's a normal process when you dip your toe in the water and you're not liking what you're seeing. I think it's probably smart to pull back as opposed to go forward and have something be extremely unsuccessful. I think, unfortunately, for some of those companies, you would never be able to recover from that.
Sure.
So I think by dipping your toe in the water, kind of starting those conversations, in some cases, nowadays there's that little bit of intrigue that makes them, some people say, oh, well, they're not ready. They felt it was going to flop. And other people say, well, maybe they think that their valuation's too low and they want to pull back because they think they're going to be able to get a higher valuation. So in turn, by kind of not doing anything after you start the process, it gives you the ability to be able to kind of get to where you want to get to at the time you want to get to. And if you do get the opportunity and you feel that the timing's right, you can move forward with it. So I think the market's changed a little bit there, and I think the fact in some cases it almost adds a little bit of intrigue and gives you a little bit more time to hype things.
I'm just looking right now at a calendar for this week, or the next, I guess, week and a half that we could be looking at, and a lot of the potential IPOs are companies that are involved somehow, some way in the medical field. There aren't a lot of companies in the same type of realm as Alibaba that are even listed on this calendar.
No, absolutely. And I think that the one thing that everybody has really kind of ultimately engaged in of late has really been these type of platforms or services that are somewhat very well known to I guess just your average person.
Sure.
Facebook was that one, and now anything that kind of relates to e-commerce or anything like that really garner a lot of interest just because of the fact it's viewed that they've got such a wide market share. So many people are using it, more and more dominance in the e-commerce space regardless of where they're spending their money. Americans are spending a lot more money online through e-commerce. So, even when you look at that, it gives you the opportunity to really be able to look hard and say, the trend would dictate that, e-commerce in general is going to be a growing field.
Yeah, and it has, I was just about to say that. You're going to see probably a couple more, I would think, probably in the next year or so, a couple more e-commerce companies that will get into maybe listing publicly here in the United States.
Absolutely, and I think that obviously just with the trending and what's going on, that's probably a good move, and I think they'll continue to kind of see growth in those areas. It's kind of the onset, even though e-commerce has been around for a while, the really huge transition has really started to take place, and we're at the point now where people are making purchases of large-scale items on their iPhone.
Yeah.
Think about how far that's come in the last 5 years.
How much would the proposed payment platform on the new iPhone kind of add to that kind of path?
I think it just makes it a lot easier. I think it's clearly where everyone's going. The mobilization of purchasing and searching is one of the biggest things right now, just in general related to business in my eyes. So obviously with the iPhone being able to do that, obviously I know they're going to kind of get the credit as being the innovator. Everyone will follow them into that space, but it clearly plays into the fact that e-commerce is really reigning king, and people can make purchases from anywhere at any time, and they want to make sure that they've got the function to be able to fulfill that.
Right. All right. Ken, I appreciate the time. Thanks very much for coming on the show and enlightening us a little bit, and going to be very interesting to see how this all plays out. But if you had a ballpark, when are we probably going to see Alibaba's first day of trading?
I'm thinking probably within the next 2 weeks.
Okay. So maybe towards the end of next week at some point.
I'm thinking it depends how some of this roadshow goes, but I'm thinking probably in that time frame.
All right, great. Ken Wisnefski, thanks very much, Ken. Appreciate it.
Thanks, Dan. Thank you very much.
Ken Wisnefski, CEO of WebiMax, digital marketing firm.